We strive to maintain our effort in building trust in the society and contribute towards finding solutions that are in the best interest of the economy and the society. We bring our 40 years of expertise, connected thinking, and global experience to execute and deliver.
For over 40 years in the UAE, we assist clients in making smart decisions that bring lasting value.
Our leaders work with governments and regulatory bodies to shape the future of the profession by applying knowledge through deep specialization.
It's a top 10 accounting network, grow global, spread out in around 145 countries with 40,000 partners and staff, provide global service on a personal scale.
We are focused on client experience by building trust and aiding sustainability.
Close working relationships are at the heart of our effective service delivery globally.
Our broad technical expertise and deep market knowledge means we are well placed to offer pragmatic advice to growing organizations.
We continue to invest in innovation, technology and training, which helps us improve the quality of our services and helps us achieve the efficiency in the new normal.
With continuous improvement in quality, regulators and stakeholders continue to place greater reliance on our work.
Our people-focused culture means we value ideas and innovation.
At Crow, we nurture talented professionals who share our core values of caring, sharing, investing, and growing.
We are a part of an exceptional group of people who are committed to solutions that differentiate and adapt.
Ethics and integrity are the cornerstone of our commitment in serving clients. We appreciate the support of our beloved rulers and the systems they have established.
Good morning, everyone. Thanks for joining this webinar. Myself, Benicha, I am a partner in the tax and technology where I am catering the indirect tax and direct tax with my help of my great team. So it's honor for us to having a huge subscription or huge registrations, and the response what we get and importance, we know that we came to know that from within very short period that new amendment is going to be applicable. So we plan for this webinar to our clients and those our loved ones, we can say that, to help and understand them. So as everybody knows, there is two major changes is that one is the decree law amendment is effective from the 1st of January 2023. Is very important to know about that for everyone. especially those who are for the doing the accounting, tax return filings. So, and second thing is a EMARA tax portal. So our aim to this webinar is to its awareness, creating the awareness, and some query and explain you in proper manner, which help you in your day-to-day routine life. We have a team. Mr. CA Dharmesh Vader is there. He is heading the next to me for the tax, indirect tax especially. Mohammad Ilashri, he's a Arabic speaker and very good in English as well, and Umesh. So these are the key people of our team. They are here to assist you for and explaining you about the tax. Due to heavy registrations, we request you to post your query in the chat box and questions box. So if we get the time to answer you after the in the session, maybe by email or possibly certain question we can carry out over here also. Apart from that, everybody is curious about that. Still people are like joining, I can see that. So I will take more 2 minutes for that. Apart from that, most important changes is coming as a corporate tax in the market. We are already there to assist a lot of clients for the corporate tax. And we are coming up with the webinar on the corporate tax on in first week of January tentatively. So also look forward to same enthusiasm from your end to participate on the webinar. And soon by end of January, there will be in-person meeting on the corporate tax is going to be there by the CRO. So we always look forward to assist you, and there will be the contact detail. You can contact us anytime for any query, any clarifications. We are always available to you. Now I think going to the main session. So main session will be going to be led by the Dharmesh. Whatever amendment has came, he will explain you and impact of that amendment. Earlier how it was and now what will be the changes, right? So now over to Dharmesh. Yeah.
Okay. Hello, good morning, everyone. Thank you, Binit, for the brief introduction and setting the tone of for the webinar. I hope my screen is visible to everyone. Yeah. Okay. So definitely there were amendments that were carried out by FTA, which has a very wide impact on the industry, and the processes and the systems definitely will be getting impacted. So we'll be discussing all the amendments which have been carried out by the FTA under the VAT law, which is the federal decree law, the executive regulations. There are certain amendments in the tax procedures as well, and obviously at the end we will be guiding you on the EMARA tax new portal as to what are the new sections that have came into EMARA tax portal, and how those sections are impacting the new tax portal as well as the users. Okay, we will now proceed for the federal decree law and the amendments that are getting impacted from 1st of January 2022 itself. Okay, the very and first and foremost amendment, and I would like to spend some time over here as well, which is the increase in the statute of limitation, and which is also termed as extension of timeline for the assessment and audit for all the taxpayers. So previously, as per Article 42, only only 5 years was allowed for completing the assessment and starting the assessment as well as the completion of the assessment for from any tax period. Now with this amendment, the FTA will have an authority to extend the timeline up to 15 years, but we will stagger this, and I'll explain you how it will extended up to 15 years to the max. So first and foremost thing is, in case if the FTA issues any audit or assessment notice in the 5th year, let's say for January 2018, the 5th year will be 23. Okay, if in the 5th year the assessment or audit notice is issued by the FTA, in that case the FTA will have additional 4 years to complete that audit. So in short, the FTA will have additional 4 years, in total of 10 years, sorry, 9 years, so, to complete the audit and issue their observations. So from that perspective, the timeline has extended and the statute of limitation has extended from that perspective. The second new thing that has came up is in relation to the voluntary disclosures. In case if a taxpayer is filing a voluntary disclosure in the 5th year, let's say for February 2018, the voluntary disclosure is filed in 2023 because the 5th year will be ending in 23. The tax authority will be having additional 1 year time to assess the voluntary disclosure that is submitted by the taxpayer and to issue their observations as well. So 1 year additional time will be granted to the tax authorities in relation to the voluntary disclosure itself. So they have the authority to ask for certain documents, certain requirements from your end. Whatever the voluntary disclosures you have filed, they will be getting into the details, and if they are satisfied, they will be providing their observations. In case they are not satisfied, they will be asking for certain more information, and they'll be inquiring into the details. So this also perceives that voluntary disclosures will not be able to file after the 5th year, completion of the 5th year. So in case if there are any voluntary disclosures to be filed, the 5th year is the last year in which the voluntary disclosures can be filed. In case any of the voluntary disclosure is not filed and the error or certain things are not went unnoticed up to 5th year and it is noticed by the taxpayer after the 5th year, then in that case only the assessment and audit can be conducted by the tax authorities, and the issues can be brought into notice by the tax authorities themselves, and then they can make certain changes to the VAT return as per the guidance of the tax authorities, and pay the tax or the penalties that may be applicable from that perspective. So here it is actually very important that the voluntary disclosures, wherever there are any past issues that are noticed that are noticeable, it can be tracked and noticed before the completion of 5th year, so that a voluntary disclosure is filed on time. Because if the voluntary disclosure is not filed on time, that is before the 5th year, and if the tax authorities come to notice about that, the magnitude of the payment that the taxpayer needs to make will be much more higher than the voluntary disclosure that you are making and the tax payment that you are making. So from that perspective, it is very much critical that the past past VAT returns and tax position that you have taken, the thorough review should be done, so that there should be no undue disclosures that are made and which calls for a correction. In case a correction is to be made, it can be done before the end of 5th year itself. And now the last one is in relation to tax evasion and or failure to register for VAT. The tax authority has extended the time limit up to 15 years. So this is the maximum timeline. But in this case, the tax evasion should be there, and there has to be a failure to register from VAT and non-payment of taxes by the taxable person. Now, tax evasion, there's a new definition that the FTA law has provided, which specifically mentions as a person's use of any illegal means which results into reduction of amount of taxes or any non-payment of tax, or applying for a refund which was not due or not eligible for the taxpayer. So in case the taxpayer has used any illegal means, in that case 15 years of timeline will be applicable, and this will be you can also determine from here that the document maintenance and the record maintenance is very critical from that perspective, because the timeline for maintaining the records will increase, because the statute of limitation has directly been increased by the FTA authority. Okay, Now I'll be moving to the next slide. The other amendment which has taken place is in relation to the zero rate supplies. There is basically an addition under the zero rate supplies with respect to import of transportation, means of transportation, import of concerned goods and services which are in relation to the means of transportation, and certain rescue aircraft and vessels, which as well as crude and natural gases. So these are additions to the current list of zero rated supplies. Previously, these supplies were taxable basically. Now, because this amendment has brought in this additional supplies, these will not be taxable. It will be considered as zero rated, and their disclosure in the VAT return has to be done separately under the respective boxes. Okay. The other amendment, which is also very critical to evaluate from industry perspective, is in relation to the valuation of deemed supplies when there is a transaction between a related party. So whenever there is a transaction between related parties and it is a deemed supply, the valuation has to be done as per the market value. So currently, the valuation of the deemed supply was not subject to the valuation rules. Now, with respect to the whenever there is a transaction between the related parties, the deemed supply will the valuation of deemed supply will come into picture, and market value has to be identified for those transactions, and the valuation should be done accordingly. Otherwise, in case the valuation is not as per the market value, the FTA authority will have the right to question the value that has been adopted, and the taxpayer has to justify the tax authorities that yes, this is a market value, and we are supplying this goods or services at the market value itself. This amendment has been brought mainly to for anti-tax avoidance, to avoid any anti-tax avoidance scenarios between the related parties, so that the transactions cannot be manipulated, and the appropriate valuation has been adopted, so that the tax authorities also get the appropriate taxes from the transactions that are between related parties. So everyone knows basically the deemed supply is a supply wherein it's mainly without a consideration, or if there is, let's say we are buying any assets for use of business, and those assets are not forming and not anymore forming part of the business as well. The deemed supply is also meant like if there is a supply between a related party and I have supplied a certain goods or services to other related party without any consideration, that is also considered as a deemed supply. So this becomes very critical now, that any supply which is considered as a deemed supply, and if it is between a related party, the market value arriving at the market value and prices to be taken into consideration is a very critical and important thing. So this calls for a price change and price verification from all the industries, and the valuation, and obviously the indirect tax team and the tax team within the organization can specifically do specific changes in the valuation and pricing of certain products which is considered as deemed supply, and these are between related parties. Okay, I'll move to the next slide now. Okay, up till now, only unregistered person who are providing only zero rated supplies were able to file exception from registration. Okay, with this amendment in Article 15, even the registered person will now be able to apply for exception from VAT registration. This is because it is possible that when a taxable person has registered for VAT registration, has registered for VAT, they would be providing taxable as well as zero rated supplies. Now, with respect to certain amendment in law, or maybe change in the business scenarios or the business structure, the taxable person is providing only zero rated supplies, or supplies which are not taxable. So in that case, now a registered person can also apply for with an exception to the FTA, so that they can get themselves deregistered, and with that they will not be required to file any VAT return and comply with any of the VAT law provisions. So this is just to bring this amendment is just to bring in certain changes with respect to the procedures, and an exception, providing a option to the registered person to provide apply for an exception as well. There will be a separate exception application that will be made on the FTA portal. Now, since this is a recent change, I think the FTA portal will be coming up with this specific requirement on the FTA portal as to how the request can be made. This is not yet clear as of now, but they will be bringing this change as well. The next amendment is with respect to deregistration under Article 21. Previously, there was no such special provision in the under the law. Now the FTA law specifically has given power to the authorities to deregister any of a taxable person, wherever the FTA finds that it is disturbing the integrity of the tax system. Integrity of the tax system is not defined anywhere in the law, but yes, integrity definitely means that in case any taxpayers is indulging into, in case of fraud or illegal means, and using the FTA or the VAT law into their benefits, and it's not what was recommended by the law, or not logical for the law system at all, then the FTA themselves will deregister that person specifically, and once deregistered, that person will not be able to comply with any of their VAT requirements, and they will not be able to file VAT returns. So all the compliance with respect to the VAT law will not be applicable, but that does not mean that FTA will not be able to recover any pending taxes, penalties and levies that are due from that deregistered person. So even after deregistration, the FTA will have a right and power to approach the deregistered person and recover the taxes, penalties and fines that are due from that person until the dues are cleared. Okay, I'll move to the next slide now. Yeah. Continuous supply, which basically means periodic supply. Continuous supply definition is not defined in the law, but yeah, the continuous supply definitely, it means supply which are provided on a continuous basis. For example, let's say the supplies which are in relation to telecom industries, in relation to electricity, in relation to any kind of annual maintenance contract, which are on continuous basis. Okay, so these are definitely these supplies are categorized as continuous supply or a periodic supply. So Article 67 clause 1 has been amended to provide that in case of continuous supply or periodic supplies, now the taxpayer has to raise a tax invoice within 14 days from the date of supply. Previously, section article 67 was not subject to article 26. Now they have included article 26 under this gamut also. Previously only article 25 was covered, wherein normal supplies apart from continuous supplies or periodic supplies were covered. Now even the continuous supplies or the periodic supply which is covered under article 26 will also be governed by this article 67(1), and the taxpayer will have to ensure that the invoices are raised within 14 days. Now, given that and saying that the determination of date of supply for a continuous supply, how to find that? Definitely that is a big question, but for that also the FTA law has provided a specific date of supply rule, which is article 26 itself, as to how to determine the date of supply or time of supply for a continuous supply as well. So it can be the date of payment, it can be raising of invoice, it can be the completion of the or provision of the service, or the providing the goods. So the taxpayer has to properly ensure that these dates are properly maintained in your system, and if not, they need to set the processes now so that the dates are maintained and they have all the evidences to prove that yes, the date of supply of this particular contract or this particular supply is triggered on this date or in this month, and they will have to ensure that the 14 days from that date of supply is monitored and the invoice is raised within the timeline. of this article. In case the invoices are not raised within the timeline, definitely then there will be procedural penalties that will be applicable, and the FTA might come up with certain stricter norms from that perspective. And saying that, just wanted to highlight very categorically that this procedural penalties will be applicable on each invoices. So it is very much critical that the date of supply for continuous supplies are monitored and tracked properly in the system, so that the invoices are raised within time, within 14 days. Okay, I'll move on to the next article. Now, Article 33 previously was mentioning that the place of agent will be considered as the place of principal. So obviously in UAE there are various business scenarios or business structures wherein principal are operating through their agents, and it's possible that the principal and agents are located in the same country, which is UAE, and it is also possible that either of the principal or the agent are located in the other country, and one of them in UAE and one of them outside UAE as well. So here, by this change, they have reversed the place of residence from perspective of principal and the agent. So previously it was whenever an agent was located and they were providing any kind of supplies, their place was considered as the place of residence. Now they have turned the table and they have made the changes, saying that the place of principal will be considered as the place of agent. Now let's consider a scenario where the principal is located outside UAE, and the agent is located, and they are running their business through an agent who is located in UAE. So in this case, in the place of residence, the place of supply provides that the place of supply in case of any kind of supply will be the place of supplier. In this case, the place of residence of a principal will be considered as the place of supplier. Okay, and since the place of supply will be considered as the principal place of business, since the principal is outside UAE and the agent is only acting on his behalf within UAE, the tax position from that perspective will drastically change, and a taxpayer has to now evaluate and ensure that the tax positions are properly mapped in their tax system, and the tax is appropriately paid or not paid, or the appropriate disclosure has been made into their VAT return as well. So similar situation will be applicable when the principal is located in UAE and the agent is located outside UAE. So any transaction between the principal and the agent, and the principal, and from the agent to the third party as well, these all transactions now are to be seen, and the tax position needs to be checked very categorically, so that the mapping is done properly into the system, and the processes are also in place, so that the VAT return which are filed for the next upcoming months or quarters as may be applicable are filed correctly, without any errors or any kind of misrepresentation in the VAT return. Okay, I'll move on to the next slide. Input tax recovery by an importer. Article 55 has been amended now to bring in two changes to the conditions to recover the input VAT. Previously, this condition was not there in the law. Now, and in case of an importer, whenever they are importing goods or services from outside UAE, the importer was this condition was not specifically mentioned in the law, that they have to maintain the import documents like import invoices, declarations in case of goods, and any kind of correspondence that is related to the import of goods or services. Now, by adding this condition specifically in the law, the taxpayer is mandated to now ensure that these documents are kept as per their records, and they are available for the tax authorities to be verified. So here it is critical to ensure that the documents are available. Here I would like to very categorically highlight that in case of import of goods, normally it happens that the invoice is received after the goods are being imported. So in this case, generally, as of now, the law was not specifically mentioning to keep the invoices records, But now, since the invoice record is very much a condition to recover the input VAT can be recovered only if you have the invoice. So you need to, and the client, the taxpayer need to ensure that whenever the invoice is available from the importers, only then the input VAT is recovered in the VAT return. Else we can claim the VAT return in the next VAT period. Okay, so this is a very critical thing. Alternatively, the importer can be the vendor can be requested to issue the tax invoice or the invoices at an early stage, so that the input recovery will not be delayed, and there will be no unnecessary tax that is required to be paid on this. Okay, I'll move on to the next amendment. Next amendment is also in relation to the input tax recovery. Previously, there was no clarity on the input tax recovery to be made by the government entities and charitable organizations. Basically not a clarity, but the law was not providing this. Now the law has specifically provided that in case of government entities who are providing sovereign activities, and charitable organizations who are into providing certain charitable related activities, and they are functioning in that fashion, the input that the expenses that they incur, wherein input is VAT is chargeable, the input VAT is recoverable for those specific activity itself. So it has to be ensured that for a government entities, it has to be for a sovereign activities only, and for charitable organizations, the charitable or entity has to ensure that these are for charitable activities which are specifically mentioned in the law. So from this perspective, this is a welcome amendment, and the government entities and charitable organizations can now claim the input VAT on this on the VAT that has been incurred by them. Okay, I'll move on to the next amendment. Output tax adjustment. Basically, I'll just explain you by giving an example. Article 61 one specifically did not mention or did not provide anything previously, wherein a taxpayer, if there was a change in tax position, or if the transaction was considered as a standard dated supply instead of a zero rated supply, or let's say exempt supply instead of zero rated supply. So whenever there was an error in the tax statement that was made by a taxpayer, the law did not provided any procedure or any situation where how to clear or how to make those changes correct, or how to make those errors correct. Now the law has specifically amended Article 61 subclause 1, mentioning that in case of any error in the tax position or the tax treatment, the taxpayer can make an adjustment in the VAT return specifically, so that the errors that has happened in the past can be corrected. So as a practice, generally the taxpayer was following this methodology to correct their adjustments and make the adjustments for any errors. But now, since previously the law was not clear and did not provided the situation, the law has now categorically provided the situation, and mentioning that the compliance for any kind of error has to be done in this fashion itself. Okay, I'll move on to the next amendment. Now, timeline to issue a tax credit note has also been amended. Article 62(2) previously did not mention specifically about timeline to issue a credit note. That means whenever a credit note was issued in past, the taxpayer was not required to see if the point of the time of supply or the date of supply for that credit note or the date of that event has occurred or not. So whenever an event occurred in the past, whenever it was noticed by the taxpayer would raise a credit note as per their convenience and as per their business understanding, as well as the understanding with the vendor and the suppliers. Now the law has specifically provided that in case of a tax credit note, the occurrence of the event will be the point on time within 14 days from the occurrence of that event. The taxpayer has to ensure that the credit note is raised. Now this becomes very critical here. It becomes very critical that all the taxpayer should identify the occurrence of the event. Now that's basically a very subjective thing. Now, how to determine an occurrence of an event is subjective. It depends on business to business and industry to industry. But just to give you an example, in case there is a deficient supply of any kind of service, and the customer is highlighting that to the supplier that I have received a deficient service, and they need to be replaced, or they need a credit note with respect to certain amount. The agreement of that deficient supply for the taxpayer will be considered as an occurrence of an event. In case the taxpayer agrees to that, yes, there was a deficient supply and he was ready to accept that, in that case the occurrence of event is that agreement of that acceptance of that request from the customer itself, and that has to be recorded on the email or the document somewhere. And from that perspective, 14 days from that date will be considered as appropriate time to raise a credit note for any kind of invoice that is to be done. So, and one more thing which is very important, that credit note which is to be raised within 14 days should also mention specifically the original invoice numbers and everything. So from that perspective, it is very much critical that we track the credit note from the origin and ensure that the credit notes are raised in properly raised, and the occurrence of the event has been properly tagged in the system as well. This may happen in case of goods also. In case of deficient goods also, it is possible. In case of discounts also, this is applicable. In case there are discounts that are to be provided to the customers at the later point of time, the occurrence of the event as to what triggered the discount is very important. Okay, so the occurrence of that event will trigger the credit note, and within 14 days the credit note should be raised by the taxpayer. Okay, I'll move on to the next. Okay, now my colleague Mr. Umesh Bhatt will be taking on amendments which are there for the executive regulations, and he will be guiding you through this. Okay, Umesh, you can.
Yep. Yeah, thank you, Dharmesh. And good morning, everyone. I'll start with discussing the amendments to the executive regulations. So there are two amendments. The first amendment is Article 72 that relates to the e-services that we provide. So e-services, currently what the law says is that in the amendment, the law says that when you are providing e-services, electronic services via the electronic marketplace, then the taxable person providing these services is required to hold an evidence that where they are making the services, in which emirate they are making the services. So this evidence is required. This was the first amendment, and the next amendment relates to the director's function. This is in Article 3, Clause 2. The director's function currently was as it's mentioned that the director is the director providing the services. Those services are out of scope, provided it meets two conditions. The first condition is that director should be a natural person, and the second condition is that the services should be provided in the capacity of a director to a private entity or to a government organization. Now here you can argue if the services are provided to a government organization or to a private company outside UAE. This will also be an out-of-scope service provided certain conditions are met. Again, both of these articles, these changes that we discussed, these will be effective from 1st of January 2023. So now, specifically in the case of director's services, you have to see where the transition period are being triggered. If the transition period, like you can take the example of director service being provided in 2022, and then you issue the payment to the director in 2023. So since the time of supply or the date of supply is triggered in 2022, the supply will be considered a taxable supply. Another example is where the director is providing the services over 2 years of periods, and there are consecutive or periodic payments to the directors. So here in this scenario, the payments that are made in 2022 will be subject to VAT at 5%, and the payments that are being made in 2023 will be out of scope. Because as I mentioned, the law comes into effect from 1st of January 2023. Lastly, another scenario can be that the director provided the services in 2022, and then the services are being paid, or his services are being billed in 2023. The fee is being determined in 2023. Time of supply wise, this is a supply that is being triggered in 2023 when where the law says that the supply will be out of scope. Again, this supply will become out of scope in this scenario. What organizations or companies will have to do in this entire amendment is to see where they're getting the director services from, and how they're going to treat it in 2022 and how they're going to treat it in 2023. So for example, director services are being provided by a non-natural person, a legal person. He's providing the director services, or or a company appoints a director for another company. Their care should be taken to see how the VAT will apply. Largely, the entire application of VAT in these scenarios will depend on how the contracts are structured, how the agreements are being formed between the directors and the company. These two were the amendments that we discussed to the executive regulations. Now moving to the tax procedures law in the next slide. So tax procedures law, this came into effect. This will come into effect in March 2023. There are several changes. Actually, FT has revamped the entire tax procedures law. Previously, there were less clarity. There were gray areas where things were not clear. For example, there were definitions. That business, how business is defined, how other items that are in the tax procedures law are defined. So FTA has made several changes in the tax procedures law. There are additions of definitions, there are amendments of definitions, plus there are additions of many articles, and then there are additions of and amendments of some clauses. I'll start with the voluntary disclosure. Earlier, we know that we are supposed to submit a voluntary disclosure. In simpler term, when we see there is an error of 10,000 dirhams or more. If in a VAT return that you reported to FTA, you understated the VAT liability by 10,000 dirhams, then you are supposed to submit a tax voluntary disclosure if there is 10,000 dirhams or more. However, in the amendment, which is in clause 3 of Article 10, it says that the company, if it's an entity or the registrant, VAT registrant makes an error in the VAT return or an omission in the VAT return, he must submit a voluntary disclosure. So this was the first key amendment that we saw in the tax procedures law. The next one is in Article 11 of Clause 2 of the tax procedures law. It says that notifying tax registrant via his, for example, sending him a notification in the registered address or through other means, this will be considered deemed notified. Acceptance confirmation of the recipient is not mandatory. Just FTA can just notify you through sending a notification to your registered address. Sorry. So the next amendment is in clause 2 of Article 16. Here the law says, the procedures law says that you will be given 10 days to prepare for the audit. So for example, if FTA is going to audit you after 10 days, they will notify you 10 days in advance prior to conducting the tax audit. Earlier, there were 5 days, and now there are 10 days, which seems like a good opportunity for people, for companies, for tax registrants to be prepared in advance for any tax audit that is going to come. Then the next amendment, it's actually an addition. When the taxpayer is under tax audit, the authority should not hold or on processing a tax refund application to the taxpayer subject to meeting the conditions applicable for the tax refunds. Here an example could be that an individual or an entity is under audit, and the tax authority somehow finds that they are not going to recover the tax payable, or they're going to make a loss on the tax payable. This is made available to the tax authorities through some means. In such a scenario, the authority can put a request with the competent court to seize or a seizure of any assets that the taxpayer holds, or any freezing of the funds of the taxpayer holds. So this was actually the new and very concerning amendment that was introduced in the tax procedures law, where actually the entire tax procedures law describes how you should be prepared in advance for the tax audit. The next article is the authority may seize property to the extent of payable tax in case where there is a possibility of loss to the authority. And then actually the clause 39, it describes the refund. For example, currently the situation is that the tax authority, when tax registrant is under tax audit, the tax authority can deny or can cancel the refund, any refund application submitted. That's not allowed now. Then the tax authority must refund any amount of refund request that is put to them. On the other hand, Article 40 is about the seizure of the property to the extent of the payable tax. If the competent, the authority will put a request to the court, and then court can determine if the seizure of the property is allowed or not, and based on that they can recover their loss. Then the tax assessment review, this is actually when the taxpayer has any dispute in terms of any amount or any assessment that they're facing. So Article 28 is the new addition. In this regard, the tax assessment review request can now be filed by taxpayer within 40 business days from date of receiving assessment notice, provided reconsideration application is not filed. Again, here a tax assessment can be once the taxpayer receives a tax assessment or receives the detail of penalties from the tax authority, tax dispute resolution committee, then they have 40 days to put an appeal to the relevant authority for the recovery, or for the amendment, or for any reconsideration of the tax assessment that is put to them. And that was Article 28. The next article is Article 35. It's actually related to Article 28. That here actually the law gives extension to the taxpayers and to the tax authority, tax dispute resolution committee, to extend the 40 days period beyond this 40 days period in case they're fulfilling certain certain criteria and in certain situations. So for example, if the tax registrant or the person who's undergoing audit, or the tax dispute resolution committee, or the tax authorities that is auditing the person, they want an extension of the 40 days period, then they can put a request and based on the request and the scenarios, those 40 days period can be extended. So these were the key changes in the tax procedures law, and again this will come into effect from March 2023 onwards. Many different changes, many new amendments are there, and again companies are the tax registrants are advised to look into these details, especially where you're supposed to file a voluntary disclosure. For example, if you have directors' services being taken, so here you're supposed to take more care and go into more detail and be more ready for the audit. So over to Dharmesh, he'll be explaining the rest of the webinar.
And what the taxpayer needs to take care or to understand with respect to the new portal that has came in. Yeah, Ilashri, please.
Thank you, Mr. Dharmesh. Thank you. Hello, everyone. I'll be introduced for the new changes and the key changes for EMARA Tax, the new portal, which it had been introduced last 5th of December 2022. And the key changes and why exactly FTA implemented the new portal. This one coming aside with the new changes with the federal decree law and the executive regulation to make it easy and they become easier for FTA for the administration process, and also to increase compliance and reduce the risk for collecting the taxes and to implement the penalties properly and have records for the previous and the backlog history and any correspondence between the taxpayer and FTA, which has become easy now to be shown there. If you are an existing client, if you are an existing taxpayer and you have registered already and you are trying to migrate the data from the old e-service portal to the new EMARA tax portal, the screenshot which is showing here, you will find for the first time. What you need to do is you need to reset the password for first time at least. You can show here the button, please reset your password. You will click there. After that, you need to provide your email and use the e-services login username and password in order for login for the new EMARA tax portal. You will receive one email and one-time password. It's a temporary password. You need to activate the password for the first time. After that, use this password to create and generate your new password. So at this time, you can change the email for this one, and this is opportunity, unfortunately, to change the email, because previously the process for changing the email, it was so long and it's hard to change the email. So if you'd like to change the email, and I will be moving to the next slide. If you'd like to change the email, you will find there the bottom of changing the email is mentioned there. So what you need to do is you need to mention your new email ID. After that, once you click new email ID, you will receive an email, and what you need to do is to verify the new email, and also it will be shown at the next slide, which I will be moving right now. What you need to check is the e-services. If you would like to log in for the new EMARA tax using the e-services portal using the existing password, or if you registered mobile number and you is registered already properly, so you will receive an OTP or the one-time password using your email using the e-service portal. I will move to the next slide. This one here, most of taxpayer can log in easily using the e-service portal. Sometimes the phone cannot receive the OTP or it will come late. So the e-service password, you will receive it. As you can see, you will mention your email ID. After that, password, and you click verify. The new, I will be moving for the next slide. Once you click verify, the new email will receive the link and the one-time password as I mentioned. After verification and activation for this password, you can log in successfully here using this email. You would need to mention your email ID and the password which you created successfully and provide the security code here as it's shown. After that, you can log in for EMARA tax, and let's move to the next slide to check the dashboard and how it will be. There is one more option will become valid as soon as FTA will launch the new facility, is you can log in using UAE Pass as most of government entities, but this one unfortunately is not valid now. And this is screenshot as it's provided from the user guides as FTA provided. So this facility will become soon, and the authorized signatory can use this facility to log in using UAE Pass. I will be moving for the next slide. If you are looking for this one, once you log into EMARA tax portal, you need to choose one of these options, is a taxable person. If you are presenting the company and the legal entity as a legal representative, and this option, for example, for a tax agent or for someone already you authorize him legally to become a legal representative. If you are making the registration as a tax agent, you need to choose the other option which is mentioned, tax agent there. If you are making the registration as a tax agency, you will tick this tax agency option. After that, you will mention tick and choose proceed down at the right side hand down. I will be moving for the next one. Here at this case, we are a taxable person, it's your company, so you will be moving to this next slide. And the dashboard, as you can see, it will show you your company registered. Instead of this name Shahina, it will mention your company name there. As you can find the correspondence and whom at your left side. What we need to do here, if you like to log in for the registration application, you need to click view. At this page, as you can see, if you'd like to add new taxable person, if you have more than one company and you'd like to use the same email ID for managing and take care of all this entity, what you can do is create a taxable person. After creating the taxable person, there will be one more box beside this box here, and you can start the registration process for your other entities if you would like to maintain one email ID only. I will be moving for the next slide to log in for the dashboard for the company which is registered already. Once you click to view action, you will find here your tax registration number, and you will notice that the status of your application is active with a green side, as you can see at the left side. You will notice at the left hand side that instead of the previous e-services portal, it was horizontally. Now it's become the choices as a vertically, as you can notice at your left hand side. I will explain briefly for these options. If you are registered with VAT, you can click under tab VAT. It will navigate you to your VAT return filing, VAT refund submission, and voluntary disclosure submission if it's required by you. Excise tax, there one option. If you'd like to make the payment for your liabilities, you can go through this tab under tab my payment. If you'd like to check any correspondence between FTA and the taxpayer for your company, you will choose my correspondence. The other option for user authorization, if you'd like to give any right access or admin access to someone else, like your senior accountant or your manager, and you'd like to give him admin access or right access, you can take this choice, user authorization. Once you click this user authorization, you can put his email and he can log into his email. After that, he will accept. We'll be moving for the next slide. Mainly, we will discuss the point of VAT return filing. As we can see here, once you choose the option for VAT at the left side, the next option will come here, returns and refunds. You will find there, if there any pending refund, you will mention, it will be mentioned there under, if there any pending returns, it will be mentioned there as a returns and how many returns it should be filed. Here under the right side, simplified VAT return, you will click at the right side there. I will be moving for the next slide. Here, if you can show that all your VAT return filing will be mentioned there, and it will coming one by one from old to the new. And you cannot do the VAT return filing for the newest one until you make the return filing for the oldest first. So here at this screenshot, we can find the VAT return for the period December 2019 to February 2020 is in a draft status. So what you need to do is you need to click at this three bottom at right side and click edit there, and you need to make sure that you will do the VAT return successfully. I will be moving for the next slide, which will be showing the edit option here. As we can so you click here at the right side and click edit. Once you click edit, it will open the VAT return draft and template, and there is something new FTA already enhanced. You can able to upload a specific draft Excel sheet for the VAT return. If you are doing the working file using this Excel, you can easily upload the Excel sheet without writing the digit by your hand. I will be moving for the next slide. Here at this slide, we are talking about the guidelines for the VAT return filing. This is the first page once you click the edit or click file to start the VAT return filing. This is the instructions and the guidelines, the first page. After that, we'll be moving for the next slide. You will take here at start down. After that, you read the instructions, you understand it carefully. After that, you are confirming that you read and understand all the instructions and your responsibility. Once you tick here, you need to complete and click start at the right-hand side down. I will be moving for the next slide. Second page of the VAT return filing, you need to make sure that your VAT return period, just you need to verify and make sure that this is the accurate VAT return which you are doing the VAT return. The second one is a VAT trigger, this one for FTA purpose. And the third one is the VAT return due date, it's already determined, and the tax year end, this is mentioned when exactly your tax year will be in. We'll be moving for the next slide. You need to mention a next step. Here you need to make sure that all this information which is mentioned here is already your information and belongs to you. You need to make sure that all this information is accurate and there is no information is wrong. If there is any information is wrong here, what you need to do, you need to go back for your VAT registration and make amendment, required amendment, in order to update this auto-populated information at the time of submitting the VAT return. You need to complete the VAT return submission. After that, you can proceed with this amendment to update all your tax records. I will be moving for the next slide. Again, back please. We need to go back for the last slide again, please, Mr. Darmish. Here, after filling up all the VAT return or uploading the Excel sheet with the accurate digit, after verifying your invoices and all your tax status, you need to confirm and declare that all information you provided is accurate and it's a genuine amount. After that, you declare and click submit. It's mentioned at the right side. If in case you'd like to review or you are not sure for a specific transaction, it's require adjustment or amendment, what you need to do is a save as a draft. Once you save as a draft, you can come after some times to make an edit again before the deadline and the due date, and you can complete again the submission. If you are sure that all the information is accurate, you can click submit. I will be moving for the next slide. Here, once you make a submission for your VAT return, you will receive this notification from the page itself as a submitted with all your information, your TRN number, your company name, a reference number for this transaction, a submission date, and the tax return period, and the due date and the end of tax year, and how much exactly is the due amount. If you scroll down, you can find at the same page, download this file as a PDF. You can maintain for your records and references. If in case there is any technical issues at future or if there is you receive abnormal notification from FTA system that this VAT return filing is not filed yet, so you can maintain this supporting document. It will be helpful for you. I will be moving for the next slide. Here we'll go for to making the payment. In order to make the payment, you go back again under your registered TRN number. You will find there the option My Payment will be mentioned there. If there any still required action, for example, you proceed with a VAT return filing, but still the payment is still pending, it will be shown here under required action. So you need to make sure that this required action box is plain and empty, and there is no action required from your side. Here we need to proceed with the payment. So what you need to do, choose under tab My Payment. Here it will addressing you for the payment and outstanding. I will be moving for the next slide. Once you click payment, it will automatically taking you for this option, My Outstanding Payment, GI-BAN allocation and payment via ECTS. It's Magneti. Here, once you make a return filing, you will find that the total outstanding, it will be shown there. If you like to make single payment for all transactions, you can choose the option Pay All, and after that you will generate a reference number for the payment and you can make the payment via GI-BAN or Magneti. Here I will take example for select and pay a specific transaction, and also to generate the payment reference number, which is important now, not like before. Before you can go to the portal and make the payment and automatically upon your choice to clear the liabilities, the new liabilities first or the old liabilities first. So here they are enhancing this facility and enabling the taxpayer to generate the reference number for each payment which he like to proceed the payment. I will be moving for the next slide. Here, once you choose select and pay, you will find this new page. You will find all the transaction which is submitted already. If you submitted the VD and there is fixed penalty, will be mentioned there. If you submitted your VAT return filing, it will be mentioned there. If you have any previous penalty like late registration penalty, it will be mentioned there. If you'd like to make a partial payment, or if you like to make a payment for the entire amount, for example, here, would like to make a payment for this VAT return and VD, you need to click at the left side and choose a payment which you wish to make the payment. I will be moving for the next slide. If you are making a partial payment, so you can make adjustment. Previous one, please. You can make adjustment here at this tab. You can make adjustment at the amount to be paid. For example, here I have penalty 1,000 dirham, but I'd like to make it partially only for this amount, for this penalty, for 500 dirham only. So what you need to do, you make adjustment here at this box, 500. After that, you scroll down, you proceed with the payment. Next slide, please. We'll be moving to the next slide. After proceeding with the payment, it will give you two options. Either you'd like to make a payment using GI-BAN, or you'd like to make the payment using Magneti, using your credit card or your debit card. I will be moving for the next slide. Here, as we can saw, the first example I had here, to make a payment using a Magneti and your credit or debit card, you will choose here a Magneti Pay. After that, proceed the payment. And also I will be moving, we need to use this screenshot, this page, this slide. The same case if you'd like to make the payment using GI-BAN. So if you'd like to make the payment using the GI-BAN, you need to tick GI-BAN and proceed the payment. If you like to make the payment using Magneti credit or debit, you need to choose Magneti Pay and proceed the payment. We'll be moving for the next slide. Here we choose at the last slide to make the payment using Magneti. What you need to provide is your card holder name, your card name, and the CVV, the security number, and the expiry date as any online payment you are doing. Please make sure that, please note that there is a service fees for this transaction from using Magneti service. After that, you need to click pay here, and once you complete the payment process, we'll be going for the next slide. Once you complete the payment here, if it's successfully paid, you can download the payment proof from the page here. If you can go one bit back. Okay, so here, after making the payment, you can download easily the proof of payment, and also if it's better if you can keep this information for your references. And as we mentioned, that to make sure that the correspondence already reflected there, that thank you for your making the payment as well. Here If you can find still pending payment here at this case about the GI ban here, I give this as a payment instruction if you'd like to make the payment using the GI ban. What you need to do is to download this PDF file as well and visit your any exchange house or financial institute, or if you are doing the payment using the bank itself to provide your GI ban. So you need this information, especially payment reference number, which has become important now to allocate the payment which you are look forward to proceed with this payment. I will be moving for the next slide. One page back, please. Hey, this is the same page. I think I come to the end of my session, but I'd like to highlight specific and key changes for EMARA tax portal, especially for registration. For example, at the registration time, at the time of registration, you need to mention monthly breakdown. Suppose now you exceed the mandatory registration threshold in specific months. At this case, the system now will require a daily breakdown. If you are exceeding the mandatory limit, for example, at 15 of the months, so that means the next month 15, you have to make the registration. You need to submit the registration and notify FTA before end of 30 days. Failure to submit the registration, unfortunately, it will be 10,000 dirham late registration penalty will be imposed there. One more point I'd like to highlight at the registration process itself for the shareholders. Now it's become, if it's already LLC and there's more than one partner, you need to include all partner shares and name and information details as well. And there is one more thing as well for the EMARA tax. It's become easy to reactivate the TRN number after a deregistration. In case you deregister based on your status and the law implication itself, and after some time at future, still there is new upcoming and you are become a taxable person and you exceed again the mandatory limit. So FTE now using EMARA tax, it's easy for them to reactivate the TRN number after the deregistration and deactivate. One more thing for the reference number, we highlighted the payment reference number, which will be allocated for each payment as well. And for here, I think if someone have any question related to EMARA tax, please leave your question at chat box and we will be answering the question shortly. Thank you.
Yeah, thank you, Mr. Elashri. So this was very detailed, and I think there will be a lot of questions that might be coming in, and obviously there's because the EMARA tax portal has changed drastically. Their look at their detailings and everything has been changed very drastically. So from that perspective, it's very much critical to understand the portal as well. Now going on to the next slide. Now I'll be discussing briefly what are the key takeaways from today's presentation, and then I'll be going on to the questions that have came in, and we'll be providing you to the answers as well. So the key takeaways from today's session is basically since there are a lot of changes that has came into place under the VAT law, the decree law, the executive regulations, as well as the tax procedures. It's very important for a business or an industry to analyze the changes and perform a impact analysis, so that all the transactions are basically tracked. The first and foremost mainly being the record maintenance for all the transactions, because the timeline or statute of limitation has increased drastically. So it's very important that the documents maintenance is properly maintained by the taxpayer. Second, obviously, will be in relation to certain changes of tax treatment, like for example, in case of import of means of transportation, the tax treatment has changed. In case of place of residence of the between the principal and agent, the tax treatment will be changing. From perspective of time of supply and the date of supply in relation to continuous supply of services or goods, the tax position will change from that perspective. Also, the procedures or the system or the processes that the industry or a company is following there will be changes in that as well. Also, there are certain changes, certain procedural and technical changes that have came in. So it's actually very important for a taxpayer to analyze these changes and ensure that these changes are in place as on 1st of January 23, so that there are no errors and the tax returns that are filed by the taxpayer are accurate. least to say, the tax laws in UAE, especially the VAT law, are getting stringent. As you can see that the timelines have been increased. They are very strict with the penalties and the fines that will be auto-populated in case of any non-compliance or any error that are conducted or made by filing the VAT return. So it's very important that the changes of the law are actually analyzed properly, and the impact are noted, and the system changes and the processes within the systems are amended and changed accordingly. Okay. Now I'll be going on to the next section, which is a Q&A. But before that, as Binit Shah initially highlighted, that UAE corporate income tax has been announced, and there will be a webinar that will be conducted by us in mid of Jan, or maybe max by Jan end. So stay tuned for certain updates from our end with respect to the corporate tax law, because there are many more changes coming in with respect to the transfer pricing, with respect to the permanent establishment, with respect to the remunerations of the management, and a lot of things are impacted, and a lot of queries have been coming in. So we will be covering all those aspects in very much detail in those webinars. So we look forward for all of you to join over there also. Now I will inform Mr. Umesh to take up the questions that have came in. Mind you, if the question we have all the questions. In case due to paucity of time we are not able to cover any of the questions, we will definitely get back to you on email and reply to the questions as well. In case if there are certain more information required, that we can discuss separately. Okay, I am now handing it over to Mr. Umesh to take up the questions and answer those.
All right, thank you, Dharmesh. Fine. There are several questions that we've received, and due to time constraint, it's pretty difficult to answer all of them. However, we will make sure that we reach you on individual basis and try to solve your queries. So the first question we've received is changes applicable to software. Are these changes applicable, these amendments applicable to software houses, information technology based companies? Yes, these services, these amendments are very much applicable to these kind of companies, especially if you're providing e-services or if you're providing electronic services. Then you'll have to do a reassessment of the entire VAT application. Previously, there was no clarity. For example, if an electronic market is providing electronic services, for example, softwares in UAE in different emirates, they were most probably disclosing the entire output VAT, any taxable supply in their respective emirates, in just one emirate where they're located. Now you have to do a bifurcation of the entire services. For example, if you're providing services, electronic service in Fujairah or in the Abu Dhabi or in Sharjah, you're supposed to keep a record of where you're providing those services and how you maintain these records. These must be these are a bit challenging tasks, but you have to maintain these records. The next question is owner's drawings. Will they be taxable? Will they be out of scope? Very broad question, but very very important one. Owner drawings, here every company has to see in its individual capacity. Actually the owner has to see in their capacity if they're drawing it as a remuneration of the as a director, or if their drawing is just a simple withdrawal of their funds from the company. Again, most very crucial task here will be to setting up an arrangement between the owner and the company, between the company and the director, some kind of agreement or some kind of official document which will state what they should, how they should be withdrawing, in which capacity they should be withdrawing the funds. Again, if they're drawing the funds in the sole individual capacity or in the capacity of a director, that can become out of scope. Very carefully, they should be considered that whether their services are taxable or not. Whether how those services will be taxable or not, it's again the law. You'll have to refer this from the law. The next question is owner. Yep. So one of the questions is that zero-rated supplies. If, for example, a company is making zero-rated supplies, and if they deregister because they're making just zero-rated supplies, will they be able to recover the input VAT after that or not? So in this situation, again, when you are deregistered, you cannot recover the input VAT. Provided one thing you should make sure here is that you the zero-rated supplies that you're making, if they are meeting the threshold limit or not. There is certain criteria for deregistration. If you're meeting the threshold, or if you're meeting that criteria, then the company can deregister itself. But again, and the drawback here will be that you will not be able to recover any input VAT and once you're deregistered. Then there is the next question is amendments applied on zero-rated supplies. Yes, the zero-rated supply for the companies which are located in free zone, in DMCC, in any free zone, even the designated zones, these amendments will apply to them. All of these, the tax procedures amendment, the amendments and changes in the executive regulations of VAT, the amendments and changes in the Federal Decree Law number 8 of VAT. These are applicable to all of the companies in UAE, regardless of their location, whether they are located in the free zone or in the designated zone. They will have to abide by to these amendments, these new laws, these changes. And another question is, if a foreign online marketplace service provider requires to register is required to register for VAT and collect VAT from the customer in UAE. Yes, foreign marketplace, again, a very broad question. But here they will have to see if they're providing services to customers located inside UAE. If a non-resident supplier of electronic services is making supply of electronic services inside UAE to registered companies, to non-registered companies, to individuals, here they will have to assess if they are meeting the threshold criteria. In most of the scenarios where a foreign marketplace is providing electronic services or providing services to companies, individuals in UAE, they will have to register for VAT. Again, this should be assessed very carefully to check if the services that they're providing are taxable or not taxable. I believe that's the end of the questions from my side. I will now hand it over to Al-Ashri. He will be explaining the questions regarding the EMARA portal. Over to you, Al-Ashri.
Thank you, Mr. Omis. Regarding the question for EMARA tax, I had here one question asking about adding shares or shareholder changed or the percentage of shares changed. So at this case, yes, you need to submit amendment request. Amendment request will be there. Whenever shareholder is removed, you need to remove it. Whenever shares percentage changes, you need to change the shares percentage. And this could be through amendment request, and you need FTA approval. After approval, FTA will provide the new certificate. This is a question for shareholder about amendment. Okay, for amendment, applied for amendment on free zone company registered in DMCC and has one branch and all their operation outside UAE. If you are mentioning that there is only one branch in UAE here, so that means the registration will be on one, but this one based on the activity itself. You need to check the taxable activity. After that, based on the taxable activity and the analysis, you need advice either you will have a registration or not. But from the registration perspective about the branches, if you have a registered company here and you have more than one branch, you need to include the branches as well through the registration application. For the other question, are you still able to pay VAT using online banking? Yes, for this question, yes, you are able to make the payment using online banking through the bank page itself by providing your payment reference number, or if you would like to use the credit card or debit card, I already displayed this one through the slides. You will choose Magneti. After that, you can proceed with the payment. For the other question, okay, based on the new FTA portal, if the company is paying by bank transfer, is a paying using GI ban should be chosen. So if you are making using the bank itself, so you will choose the GI ban and you provide this information for your bank, the GI ban and the payment reference number for your bank. After that, the bank officer himself will proceed, or if you are using your bank application, you can provide the information which we recommended to download the payment instructions in order to fill up the all fields which is required. Okay. Can I use a credit card for payment? Yes, you can. Before in 2018 is one partner, but now 3 partner. You need to submit amendment request using EMARA tax portal and update all your information. Can you please advise where exactly can be address change be updated? As I highlighted, all this information can be updated using amendment request, and you need to wait FTA approval. Even FTA approval, you can download the new certificate and all your information like partner, like phone number, address, trade license renewal. Whenever you need like to update all your records, it should be through VAT amendment request. Okay. Do the threshold income for applying VAT registration still? Yes, it's the same. For the mandatory registration threshold, the taxable amount 375,000, and for the voluntary registration limit 187,500. Does the only shareholder of the company director needs to pay 500 on this salary? This question I think may be related to corporate tax or require analysis or advice because the question is not clear. EMARA tax portal, can we see the previous filing we did? Yes, you can. As we highlighted at the slides, you go to my filing, you will find all records there. You can download the previous all and the previous records. Okay, so we'll take one last question for EMARA tax portal. Can we use the old email and password of the old e-services portal? Yes, for sure. And also during the webinar, I highlighted how you can use the same email and password by resetting the password and receiving a temporarily password. After that, you will create your new password. There is one more question someone is asking about if he's have to make a new registration if he's existing already registered. Unfortunately, no, you are not required. If you have an active TRN number, what you need only to migrate and shift all your information from the e-service portal to EMARA tax portal. For the rest of question, we may contact for the person who raised this question. If there is a contact there, we will we will be answering this question in a private as well. Thank you so much for your time. For you, Mr. Darmish.
All right. Thank you, Mr. Alashi. That was quick. I think we tried to answer most of the questions that has been raised by the audience, and hopefully, I think we are at the end of the session now. With a thank you note, we appreciate that your presence during this webinar, and I hope that we had added some value with respect to the VAT law amendments and the tax procedures that has been changed. and it's really important that we now keep ourselves ready with respect to systems and processes that are already changed and will be effective from 1st of January, and the tax compliance are in order so that the compliance can be done in an appropriate manner. In case of any support required with respect to any of the services, definitely Crow is here to help and support and guide any taxpayers with respect to any compliance, non-compliance, or any tax positions that needs to be reviewed or checked. And definitely we would be glad and happy to address and analyze the situations and provide you the solutions and the support. Okay, thank you so much. I think we are almost at the end of the session. Thank you so much for joining, and we'll now conclude the session. Thank you. Bye-bye.